Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Monday edition. Sorry, I feel like I'm sponsored by Nike today. I was at the gym and just didn't get a chance to change in time. But you're going to get the post-workout Merlin here. Hopefully my hair's not too disheveled. Anyway, hope you had a great weekend out there. Something interesting happened over the weekend, and I thought I would share that with you just to make you guys feel better and know that you're not alone. As someone who's been trading nearly 30 years now, I started actively trading my own accounts back in 1996. So this year, shockingly, will be 30 years I've been doing this. I'm just kind of blown away that I've been doing it this long. But anyway, 30 years in the books so far. I think actually it'd be probably right around, I think it'd actually be more in like August would actually be the 30-year anniversary. I have to go look and see when I first started. I've documented somewhere the show when I first started. But anyway, over that 30-year career, I've done some seriously dumb stuff. Every mistake in the book that you can make, I have made it. And the thing is, it does help you get better. It does help you learn what to do, what not to do, and just make better trades. And that's why I kind of have this marketing piece here today. It says, I messed up the trade, now what? All of you have been through it. I see Jeff coming up with a couple examples of some of the trades that he messed up on. We could probably do a whole show just on sharing our nightmare trades that keep you up at night from the dumb things that you've done. And I've got a plethora of them. And I do pride myself, honestly, of being transparent and sharing those mistakes with you because I am human and I am going to make mistakes along the way. So I wanted to share one that happened actually Friday. And it's interesting is on Friday, I did not know I had made a mistake. It's one of those things that after the fact, I found out that I'd made a mistake. And Big Ev says, yeah, I closed my silver puts too early last Friday. I don't know if I would call that a mistake, right? You collected money, Big Ev. Hope you had fun at the golf tournament, by the way. You collected money. You were profitable in a trade. I don't call that a mistake. Getting out of a position too early, I don't really call a mistake as long as it was kind of following your plan. So to me, that's not a mistake. What we can do is we can refine that and see how we might be able to tweak that and make it better. But he ended up with a profit. What was my mistake? Well, I'll share you here. I mentioned last week I've been trading Tesla puts, and I've been selling puts on Tesla at a price that I would like to buy it. And I have three colored lines on your screen here. The middle one there, you can see it says 432.50. I know it's kind of hard to read, so let me zoom in here. It says 432.50. And I had 5 put contracts, which would equate to 500 shares of Tesla. Again, not the largest position in the world. It's about $210,000 position. It's okay. These are cash secured puts. For those who might be new, what that means is if at any point between now or between, this was last week, if by Friday where that vertical line is, if it closed below that blue line, which you can see it did, right? It closed right here at 430.41. So essentially, I knew on Friday that I was going to receive 500 shares. And I was okay with that, right? Because I would sell covered calls against it. So I basically sold these options, which told whoever bought them from me that I would be willing to pay $432.50 per share for Tesla. If it closed above that, who cares? I'll do it again and collect premium. That's fine. If it closed below it, now I'm going to own those 500 shares of Tesla and I have to figure out what to do with it. So as you notice here, the red line, the red horizontal line, is where Tesla closed on Friday. And that was at 430.41. So you guys tell me, if I had sold 5 Tesla put options and my strike price was 432.50, I don't know why this number is slightly off here. Let me make it exact. Yeah, there it is, 432.50. If my number is 432.50, what do you expect to happen Friday? What would be your assumption? If it closed at $430.41, what do you think would happen in my account? Type in the chat, I'm curious. The expectation would be, I'm going to wake up Monday morning with 500 shares in my account, right? Those shares would be put to me because whoever bought those put options, not necessarily a loss. Not necessarily a loss, Lori, because it depends on how much premium I collected. And I can share that with you right here. I collected $4.85 worth of premium. So even though it's down $2 from that $432.50, $2.09 to be precise, I still would be positive because I collected $4.85 of premium. So I actually would have made profit. So as Mark says, you should have gotten them. What I was expecting to see, and usually it takes a day and the account I'm using here is actually the Charles Schwab. I was expecting by Saturday to see my account reflect that I was now going to be long 500 shares of Tesla. Going into the weekend, given where Tesla was at, when it was way down here on Friday, let me get rid of this vertical line. Now, when it was down and around the 242 mark, I realized I'm going to get my shares, right? I'm going to get my 500 shares of Tesla because it's so far below that blue line. So what I did is I sold 5 covered calls, assuming that I was now going to be long 500. Let's sell the 437.50s, which is that top yellow line there. That top yellow line is where I would be willing to get out by this coming Friday. Okay, so it kind of gets a little bit nested here. I sold those 432.50s expiring last Friday. It closed below that, so I knew I was going to get my 500 shares of Tesla. In order to not protect myself, but to generate some income, I sold the 437.50s, and as you can see here, I collected $7.30 on that. Oops, I collected $7.30 on those calls that I sold last Friday. So at this point, you're probably thinking, Merlin hasn't done anything wrong yet. The trade seems logical, right? I said I was going to buy at 432.50. It's now down below it. I'm assuming I'm going to get my 500 shares, so I sold covered calls against it. Fine, that's perfect. Here's where it confused me. Saturday evening, Lori says, how can you sell covered calls before the stock is put to you? Well, good point. It would be technically a naked call option, right? But I'm assuming with 90 plus degrees probability that I was going to be put those shares. So I have cash, it's not necessarily a cash secured call option, but the size of the account lets me do that. So here's the weird part. The price at Friday was $430.41. These options were in the money by $2.09. So whoever bought those options from me automatically made $2.09. All they had to do was exercise the option. But the weird part was Saturday night, I only had 400 shares in my account. And I was like, well, hold on a second. Why didn't I get all 500? I understand if it's $1 or $2, or sorry, a couple cents in the money, but this was over $2 in the money. Now that's on 2 contracts, or sorry, on 4 contracts is what was exercised. The other 100 was not exercised. So somebody literally threw away $209. I was so confident that I was going to get those shares that I sold the covered calls. So I sold 5 covered calls against it, but now I only had 400 shares in my account. So now I have a naked call option, and I was sweating it because I think Tesla's one of those stocks that they're one announcement away from jumping 30% overnight, right? So all I could think about over the weekend, even though it probably wouldn't have been that catastrophic to my account, was that Tesla was going to open up at like 460, 470, 480, and all of a sudden I'm on the hook to buy it. So that was my mistake. I was getting a little antsy and trying to capitalize on the extra 2-day window of decay for Saturday and Sunday, right? I really wanted to get that extra 2 days. Plus the premium was so good when I sold them, I was like, no brainer. But all weekend, all I could think about was that 100 naked call that if something happened big time this morning, I was in serious trouble. So of course I'm watching the market as it opens up last night. We saw it. No, I have plenty of money in that account, Marcia. No margin call. So the mistake was assuming that the puts that I sold were already in the money, that I was going to get put those shares. For some reason, sometimes, you won't get put those shares. It's happened to me a few times where I did not get exercise on the option, even though it was in the money. And kind of got to scratch your head like, well, why didn't that individual exercise those 100 shares? He left $209 in cash on the table just for not exercising. And maybe the option was utilized for part of a spread trade or some other trade where they didn't actually want to exercise. They just wanted to, use that as a hedge, but not actually exercise the option. And that probably is what happened. So note to self. I'll tell you the conclusion here, what happened. because I've had that happen where I did not get expected when it was close. Yeah, right? And normally it would not be a problem. If I just left it alone and did nothing, whatever, 400, 500 shares, who cares? The problem was I sold covered calls against my position, but my position was only 400 shares as opposed to 5, which is not super dangerous, but I hate the unknown, right? I'm a risk manager at heart, as you all should be. So having 100 unprotected of something so volatile as Tesla just made me nervous all weekend. There you go, Lori. I'm not allowed to sell naked calls. Yeah, I am in my account. And I've done it before on a couple times. So here's what I did this morning. As soon as that market opened, which fortunately for me, it opened down. So what do you think happened to the premium? Remember, I sold the 437.50s, which I could probably have left all 5 of them on, honestly, but I just don't want that stress on me. That 437.50 call option, which I sold, actually jumped pretty significantly in volume or in price. I'm looking up the actual exercise price so I can tell you what I got out of today. I made a bunch of trades today and I have not updated my trade statement, so sorry if I don't have all the updated stuff. Let me go and look and see. So I sold those, as you can see here, at $7.30. And I bought the one missing. Remember, I sold 5 of them, but I only had 400 shares, so I had one contract to get rid of. I ended up closing that out this morning for $3. And it wasn't a question. I wasn't even thinking about, well, I'll let it sit. I'll wait and see what happens. It was like, I want to be out. I want to have 400 shares of Tesla long and 4 covered calls against my position. That's what I want. I don't want anything else because it's just too many unknowns for me. So I bought it back for less, right, Mark? And the reason for that is Tesla gapped down. We had a pretty big gap down. It sold off intraday. I don't remember what point it was. I mean, obviously, it was probably within the first 5 minutes of the day this was exercised. But yeah, did it real early this morning. Certainly, I could have gotten more money if I tried to exercise a little bit later on in the day. You can see it had a pretty steep fall down to 414. But I bought that one back. I made $400 on that trade. Fine. And now I have the other 4 contracts covering my position. So the moral of the story, at least in this one, there's 2 things I want you to take away from it. Number one, if you're selling like a cash secured put and you're selling and collecting premium, but committing yourself to either buy or sell at specific prices, you might want to wait. Even if your trade is in the money, wait until the shares show up in your account or are taken out of your account if you're selling covered calls. Sometimes they don't get exercised if you sell a covered call. So that was, I wouldn't say a learning lesson because it's happened to me before, but usually it's when it's in the money by a couple of cents. This was $2.09 in the money, so I felt like it was a no-brainer I was going to execute it on it all. So Rocky Mountain says, sounds like today's episode is for me. It's for everybody, right? The goal through all of this, through all your trading, is to make your trading better. And this is just one risk vector that if you trade options, you need to be aware of. I was eager, I was aggressive, and I was already trying to sell covered calls in a position that hadn't been delivered yet because I assumed it was going to be delivered. And as we know, assuming makes an ass out of you and me. So that's that story. So the 2 things that we're looking to take away from this is, number one, be very careful if you're doing the wheel strategy and you decide to sell covered calls against a position you haven't yet received. Even if you believe you're going to receive that position, it's probably safer to wait until Monday. Now, think about let's change the variables here a little bit. If I waited till Monday to sell those call options at 437.50 against my position, I would only have made $3 per share, or $3 per share on this bad boy. So I made $7.30 by selling them on Friday, and I only would have made $3 if I sold them today. So I made a lot more profit by being overzealous, but I put myself in a more precarious position because I had not received the shares yet. So it's really one of those things that be careful with. The other part is this. That was the first one. The first one is if you're selling a covered call or selling puts or covered calls or selling naked calls, wait till you get exercise is probably the safer way to go. And you see the shares show up in your account. I mean, I almost called Schwab. I'm like, what the hell's going on here? Why do I have 400 shares, not 500? But I know what they're going to tell me. Someone decided not to execute. The big second takeaway, and I think it goes back to the title slide that I had for today's show, which is I messed up the trade. Now what? Look, there have been countless times throughout my career. It did work out for me. Exactly, Steve. But I have to look at that as what if it didn't, right? You're totally right. He says it worked out for you this time, next time maybe not so lucky. Totally agree. It's better to wait than to anticipate. So, for example, normally on Fridays is when I love selling cash secured puts, right? And like that Tesla trade, let's go back to what happened on Friday. Friday, we closed at 4:30, or so we closed at 4:30.41. But let's say we closed, and I remember my strike price was 432.50, this blue line. And let's say that it actually closed at, I don't know, make up a number, 432.75. So I'm 25 cents in the money, right? If that happens to me, quite often I'm already selling another batch of puts on whatever stock it is because I'm assuming that my trade will be out of the money and not going to get executed. But there have been times where it's out of the money and I've been executed, which doesn't make sense to me, but someone really wanted the shares and was going to pay a premium. Excuse me. So just be very, very careful with those types of scenarios with options. I mean, it's wild what can happen and the little changes that can be made in execution. You would think it's kind of cut and dry, but it's not. Yes, exactly, Andy. I'm trying to front run the time decay because if I sell the same strike, let's say Tesla's price is the same on Friday as on Monday. If I sell those same strikes, I'm going to make less money on Monday because I have 2 days less of decay. Whereas if I sold them on Friday, I get that extra 2 days worth of decay, which may not be a lot more. But when you deal with volatile things like Amazon and Microsoft, basically the Magnificent Seven, the premium gets a little bit better there. So my first lesson is don't anticipate you're going to get all the shares if you're doing the wheel strategy and you sell cash secured puts or even naked calls. The second one is this. If you mess up, right? Let's say that you thought you were going to buy 100 shares of Microsoft, and by the time you realize it, you actually added another zero and you bought 1,000. What should you do? The common thing that people do is they'll wait. They'll wait. They'll be like, oh, well, now if Microsoft goes up, I'll make 10 times as much money. You should immediately go in there and sell 900 shares. If you planned on trading 100 shares and you accidentally, fat fingered, they call it, and put an extra zero on it, now you're in 1,000 shares, just get out, right? It's one of those things that if you make a mistake and you identify it right away, you bought the wrong price, or I've done this because some option chain, you options traders know this one really well, the way that some options chains are configured, TradeYours is kind of confusing, Thinkorswim's is okay, Schwab's is, it's all right. But sometimes you'll click on STO instead of BTO. Buy to open, sell to open. Well, one of those is going to be bearish, one's going to be bullish, right? And sometimes you'll click on the wrong one. If you click the wrong one and it gets executed, close the trade out immediately. It's not what you wanted to do. Don't wait and see if it works out for you. That's just straight up gambling. So the second part of this, discussion is I messed up the trade. Okay, well now what? I am not a believer at all that you should sit and wait to see what happens on your mistake. I am one in the past that would sit on it, right? We'll go back to my example of buying, knowing I wanted to buy 100 shares of Microsoft and I accidentally bought 1,000. I would usually, on the trading floor, I would sit there and just watch it. I'm like, okay, let's see what happens now. I didn't mean to do that, but let's see what happens. And invariably, I would say in the long run, it's cost me a lot more money than it has made me. So, Lori said, hit the wrong button before and got out of position immediately. You did the right thing, Lori. Get out immediately. Just know it. And the part that sucks about it is, I'm speaking for you, Lori, but I'm sure you can empathize with this, is you feel stupid. You're like, oh, what an idiot. And then you're like, oh, and I'm just wasting commissions. I paid double the commissions. I'm such an idiot. So stupid. Don't beat yourself up on it. These platforms can be confusing, right? And many of them, I guess they're not intuitively built for people who are non-traders. I'm fortunate, having been involved in the financial markets, worked on dozens of platforms. Not only that, but been part of the design team for some of these platforms. So I can add in functionality and things that I wanted to see, which I thought was really cool. But for the average person, taking someone who's an English teacher from a university off the street and saying, here's a trading platform, it's like trying to read Chinese newspaper, right? It's all those characters. You just don't quite understand it. It's so easy to make a mistake when you are not familiar with what that playing field looks like. Fortunately, I have the benefit of time. Steve says you could set up a spreadsheet in that situation, get out of the long side of that spread on Monday. Yep, could have. Again, how did you emotionally handle the weekend? Be honest, Ken, it wasn't that big of a deal, right? Like, what's the worst thing that would happen? In that situation, if it was currently, this is slightly bumped up, it was 432.09 or 430.09. All right, so in this picture here, remember, I had the covered calls. So if anything, my 400 shares of Tesla would have gained significantly in volume, and I would have lost on the covered calls. The covered calls would have dropped in value. If it skyrocketed, right? If it really went absolutely nuts and skyrocketed to, let's say, I'm just making up a number here. Let's say to 580 or to 480. I basically know that out of those 400 shares, all 400 will get taken away from me at 437.50 on Friday, right? So we're assuming now that it's jumping way up. We're assuming it's going all the way up here to 480. On a gap up because whatever, Elon Musk said they're releasing the robot starting Tuesday afternoon. I'm making stuff up here, please. So those of you listening to podcasts are brand new people like, what the hell is Merlin talking about? This is hypothetical. So I know that 4 out of my 500 will get taken away at that 437.50. That's the worst, right? And I would make good money on that. I got 400 shares. I'm long from 432.50. That means I make $5 per share. Therefore, that's a $2,000 gain. However, that last 100 shares, I am on the hook to sell it at 437.50. So if all of a sudden that thing is up at 480, I'm on the hook for $42.50 per share on 100 shares. That's $4,250. So even in that really dramatic situation, I wouldn't, my account wouldn't evaporate, right? It wouldn't evaporate. But let's go back a sec, because this is all step-by-step analysis of this, and I love it. I'm hoping I'm not boring you guys to death with this conversation, but it is something as traders you always have to think, best case scenario, which is what we want, run-of-the-mill expectations, and then we start to go down the worst case scenario. The question of how did I emotionally deal with the weekend from Ken is a good one. It was easy. It was a no-brainer. I couldn't stop thinking about it, right? I couldn't stop thinking about the trade because I messed up. I don't like to mess up. Not just in trading, but in my personal life. I really pride myself on not making egregious mistakes in the things that I do. Now, as you guys saw, and I had 5 contracts that were supposed to be executed to me at 432.50. And out of those 5, I only got 4. Well, what do you, and now, Ken, let's do the second part of this. How do you think I would have felt if I did not get any of my shares delivered? Right? So I received 400 shares, but what if none of those 5 contracts were exercised? What if I got 0? Right? So here I am now selling covered calls against shares I don't own. That's a naked call, and to me, that's one of the most dangerous positions you can possibly put yourself in. I do not like naked calls. They scare the heck out of me. I don't think you should ever do it. If that was the case, if I had, 0 shares put to me, even though they should have been, and I accidentally sold covered calls at 437.50, I know that I'm in deep doo-doo. Because if Tesla opened up at any price higher today, I would already be losing a lot of money. That was dangerous. Now, with that one, I'll tell you what, I probably would have had a really bad weekend. But because I knew that 80% of my position was covered and had 20% worth of risk on that, it wasn't as bad, right? It was like, oh, you silly kid, what did you do? Come on. But if I got none delivered, right? If I'm sitting there watching none got delivered, I'd be really, Andy says I'm going to be sweating bullets. Yeah, I would be really nervous all weekend. Because it's Tesla. I mean, this thing's wild. Marsha says, did you call your broker for an explanation? No. I've done it in the past. This has happened to me multiple times. And the excuse is they don't have to exercise the option. So in this case, those options were in the money by $2.09. The average person is going to exercise that option. right? And collect that $209 on that 100 shares. So that is a right, but not an obligation. They're not obligated to exercise that option. It's their choice. And maybe that individual who bought that one contract decided, you know what, I don't want to sell my Tesla. Right? Because remember, I'm committing to buy it at $432.50. They were probably like, well, it's at $4.39. I don't want to sell it. And maybe it's a cash event. Who knows what the case may be. Yeah. They were maybe just buying it as protection. They thought maybe just use it as protection in case it collapsed, but they didn't want to get out at $4.30. It's up to the person who bought that option on what they want to do. So I could have called my broker, and all they're going to tell you is the person that bought that one specific contract decided not to exercise. So, I mean, it's kind of a big learning lesson, really, for those of you who trade options, that even though you think you're going to get exercised the shares, in this case, I thought for sure I was going to own that thing. I mean, like I say, it was $430.09. That's $2 in the money. I know I'm exercising it. Heck yeah, I'm taking that $209 and calling it a day. Yep. Yeah, options are about, rights, but not obligations to exercise something. So I hope that helps some of you out, and probably hit home with a few of you. I know some of you have been commenting this happened to you before. It'll probably happen to all of you that get involved with options, particularly those of you who are doing, cash secured puts, wheel strategy, covered calls, and things like that. When you're the seller of an option, they don't necessarily have to be taken away. Now, for me, when I'm buying options, they're always taken away because I don't call my broker and say, hey, that option that I purchased, I don't want to exercise that, even if it's in the money. You would have to call that broker and tell them that was your intention, and then they would not exercise. So somebody, the individual who bought the put option from me, told their broker, I don't want that option exercised. Just so weird that 1 out of 5 didn't get exercised, but the other 4 did. So really a strange day. And, I guess I'm being a little too hard on myself by saying I messed up the trade. Now what? I don't think I really messed up the trade. I think I was overzealous and expecting something to happen that didn't happen. And that's, maybe that's, and 0 DTE is on, yeah. Well, I mean, I could have done 0 DTEs, but I don't like that. I like weeklies. Weeklies is about as short as I get. I did sell some options this morning, but I have not updated my spreadsheet. I guess time permitting, I can do that. What time we got? All right. If you guys want, I'll update you with some of the new trades I made today. There's quite a bit going on here. All right, let's go to this page. So let me update this, even though I have not taken the time to do that. Now, this is the funny part, is I have this page right here, which shows you my average price was $420.35. But it's no longer 5 as I expected. It's 4. I put all these numbers in on Friday's show, so I was expecting that to be done. All right, now as far as new trades, this Tesla one is gone. Did I take? Hold on a second. All right, let me take just that Tesla out. So the Tesla one is now gone. I still have the Coinbase on. Silver's gone. I did close out silver on Friday. I still have this SPY. That one cost me some money today. It is definitely looking pretty bad. I did sell some more Tesla puts today. So let me go in here. I'll undo all of the understrike here. And apologize, I can't see your comments right now because I'm just putting in some numbers here. But I sold today the 410 puts on Tesla. Not a lot, but definitely sold some. And those are expiring 2/6. And the premium I collected on that was $440. All right, so that's one new addition. Coinbase is fine. You guys are going to hate me for this one. MSTR. I think that you're going to see a little bit of a bounce in Bitcoin. We can talk about why that is. So I'm doing a pretty risky trade. MicroStrategy is just a devil. I mean, this thing is dangerous. But I sold the 124 puts. We'll look at here in just a second. Those are expiring on Friday. And I collected only $1.65, so not a lot of premium, but about, I'll call it 1.3% for 5 days. I'm okay with that. Let's see, I did Tesla. Okay, so those are the trades I have open right now, and we'll see what expires over the weekend. Let's see. Expiration date on coin is this Friday. This Friday. Yep, let me bring up Coinbase over here. Coinbase does not look good, but I do anticipate there being a bounce. So remember, I'm at the 182.50s. Right now in the after-hour session, we're at 188. And you can see I got on the screen there. This does not look good. This is probably the riskiest trade because I'm playing an overbought situation in crypto. And the reason that I sold the Coinbase puts is a couple different things. I'm probably going to sell a large chunk. I'm got to be careful here. I don't want to make this comment because I'm afraid that some of you are going to jump on this expecting this result. And I'm concerned because I would hate for you guys to lose money. So if you're going to listen to what I'm going to say right here, please do it with risk capital because this is high speculation. First off, I think crypto is coming into demand zone. Bitcoin's right down around those lows. We had it mapped out, a bottom price of $74,000. Congratulations, Ed, up in San Jose. I now owe you $1 and a drink for losing my bet. He bet that it was going to hit 76 before it hit all-time highs. To be fair, I did say, I think you're going to win this bet, and he actually did win it. So congratulations. I owe you a drink and a $1 bill. Bitcoin came into a pretty decent demand zone. So let me bring up that over here. So there is our Bitcoin price chart. I thought we might see it slow down and bounce here at 80. It did bounce on Friday's session, then Saturday just absolutely collapsed. Came into the bottom end of that range. So I'm anticipating there being a bounce here, and you can see why. It's that low point that goes all the way back into April of last year. After that, I think you're looking at a fall to 69,000. And I think you'll see a little bit of a bounce, even though the fear is overwhelming in crypto right now. Remember this, I'm going to leave this red dashed line, this dotted line here. That dotted line represents the trajectory, the angle at which Bitcoin would have to fall to reach that 12-month sell-off. Actually, should be right about there. And remember, we've been talking about a 70% sell-off. We're actually following that trajectory, that line. But it feels like it's accelerated a little bit here, and I'm expecting it to bounce. So based off that, I expect it to bounce. Here's why I was being so cautious with you in this potential comment I'm going to make. Super Bowl is Sunday. I am expecting Coinbase to run some ads. And I think that these ads are going to be extremely political and targeting banks. And I think what's going to create this positive reputation, positive image of Coinbase and a negative impression for banks. You're going to be sitting around, for those of you who do watch the Super Bowl, I can almost guarantee you there's going to be some political commercial from Coinbase about how banks are trying to stop crypto and how our current financial system is pushing Capitol Hill to make rules and laws that are not good for crypto. He's been very vocal about that. The new Clarity Act, the CEO of Coinbase just went on record saying, I am absolutely not for the Clarity Act as it stands today, because what it does is it puts the power back in the bank's hands, and he's been very vocal. So I would anticipate Coinbase running some commercials, and I do think it's going to create a pop to the upside in Coinbase on Monday. Now, I could be completely off my rocker. It is pure speculation. It's not based off technical. It's just based off of social mood and vibe in digital assets and cryptocurrency. But I will probably on Friday open up another larger position in Coinbase, assuming I don't get executed by this Friday. So that's it. That commercial was great, Ollie. I thought that was such a great commercial. That was brilliant. That was a brilliant commercial. Coinbase put a QR code on the screen for one of the Super Bowls, and that was just it. Just a QR code. No one had done that before. And, I mean, they got so many new accounts because of that. It's awesome. Very, very brilliant commercial. Anyway, not liking the way that coin looks. Looks very weak. I did draw a line here, so I don't know why I drew it going out all the way to February 26th. Let me just make sure. Yeah, my Coinbase position is for February 6th, so it's expiring this Friday. So that's one, and then the MicroStrategy one is a similar situation. MicroStrategy just looks absolutely atrocious. I mean, it looks really bad. Let me throw a line on here at 124, just so you guys can see what my strike price is. It's way down there. And you notice that that strike price is a bit more strategic. It's kind of right near the origin of this big rally that happened in September of 2024. So we've come down a long way on MicroStrategy, and that's the target I have. Again, that is also expiring this Friday. Decent premium, making 1.3% for 5 days is not a bad thing. But I'm in three really dangerous, volatile instruments right now. That I think if you are going to get involved with that, you need to be very, very careful. So there we go. That's it. Let's see. What is that comment there, Ken? I've only been trading crypto for 1 year and usually see big moves on Sundays and Saturdays are usually very quiet. So that's strange. What was I was watching? Well, remember, one of the things that makes crypto unique, and there's many things that make it unique, but one of the big ones is 24-hour trading, 365, no breaks, ever. You can't say that about any other asset class. Even the currency markets, the Forex markets, which you think should trade 24 hours a day, 365, right? Because money is always moving. No. Forex closed over the weekends. There's different periods where they are closing for resets. That just tells you that the system is outdated. If new technology allows markets to move 24/7, 365, why isn't everything using those? So I think that's going to be something that changes this year. We do know, and I did a show a few weeks ago talking about the NASDAQ going to not 24-hour trading, but it's like 23.6, right? 23.5. So basically getting closer to what the futures markets are doing. And there will be some pros and cons to that, but at least it's moving in the right direction where money will no longer have to pause or to reset and regroup. Atticus says, I like having the weekends off. Well, you can always have a weekend off, right? You just not trade. But because crypto, if we take the futures markets, for example, right? They close Friday evening and they open up Sunday night. Between that window of time, a lot can happen. You can get a lot of gap ups, gap downs. It's driven by political events and attacks and conflict, whatever. There's so many different things that can impact markets while they're closed. So Sunday night is really reactionary to what happened over the weekend. With crypto, I think it's a plus and a minus at the same time. One of the interesting details is that 24-hour aspect. So if you're a futures trader or a trader period of some other asset class, your markets are closed on the weekend, you have no place to play. Now, if you're like Atticus, he says he loves having the weekend off. There are other people out there that don't ever want to take a break. They're addicted to trading, and they'll go and move in that crypto market. So when you have a relatively low liquidity marketplace and a lot more participants join over the weekend, you can create these very wild, large swings because that's where people have to go to play. So, well, Sunday, you get the Sunday evenings, right? So you open up Sunday night for the futures market. Kraken, Tesla tokenization. It's coming, VB. Coinbase already claims to have tokenization of equities, not on their US site, but on their international app. You can trade tokenization. Steve says, if I'm selling puts on crypto-based product, it's only IBIT. Yep. I think MicroStrategy could go under. Yep. Bitcoin may fall apart, but won't go to zero, in my opinion. I agree. It could have a massive sell-off because of forced liquidation. We'll see what happens with MicroStrategy. Again, I'm nervous about MicroStrategy. I don't want to hold it long term, but I'm okay to go 7-day windows at a time. Therefore, if I do get burned, it's probably not going to be too severe and continue to collect some decent premium. I want to tokenize my C3PO. Well, look, I'm waiting for it. I can't wait to see. I want to see those things in action. Bring out those robots. Big up, those MicroStrategy puts don't hurt as much at current price compared to the old days. Yeah. Right, when it was trading at 350. I mean, look, I'm so fortunate. I got out at 315, and it's gone from 315 down to 139. I mean, if I was stubborn, remember I had a long position. I was selling covered calls against it. This is why you have to set rules, and 315 was the number I said I'm getting out at, and fortunately I did. Otherwise, I would have been losing several $100,000 had I held it. I had quite a large position, so yeah, it definitely doesn't sting as much now. But the premium's pretty good as well. Premium's pretty good right now. Let's see. What else do you guys got here? Sorry, if I didn't get your question, Marsha says, what will happen if Bitcoin moves to $50,000 which leads to financial ruin for individuals and hedge funds? If you did it the right way, the way that I encourage you to invest in crypto, then no, it won't lead to financial ruin at all. With crypto, you should be investing money that if you lost it, it's not the end of the world, right? So I have a sizable crypto portfolio, which obviously has taken a pretty significant hit. I'm not worried at all. It's not something that would, certainly would change my life for the better knowing that I have all this capital. But if it went to zero, it wouldn't ruin my life. I could still function. I'd pay my bills and enjoy the lifestyle that I have because that account is a long-term set and forget kind of portfolio. If you are like some friends I know who I've discouraged from this and they go all in, they put everything they have in whether Bitcoin, Ethereum, Dogecoin, it doesn't matter which one. But if you go all in on one asset class, you're opening yourself up to way, way too much risk. And that is definitely something that I do not want to be a part of for myself. I'm not taking on that much risk with my net worth, if you will. So if it drops to 50, what's going to happen? You're going to start to see mass liquidation, and you'll start to see heavily leveraged short positions using the futures markets, using derivative markets that exist in DeFi. If we break down below, it's not even 50. I mean, it's earlier than that. If you look at where we are right now, I think that if we get down below this low point here, which is 74,441, if we get down below that, I think you're going to see a very quick fall down to 69,000. After that, there's some small stair-stepping pieces, but it would not, 40,000 is in play. And 40,000 lines right up with the target that was set from October's high. So, it would really, really suck. But the daisy chain of events would be that there'll start to be forced liquidation. So, obviously, when your main targets will be MicroStrategy. MicroStrategy could get down to the low double digits. Could it get down to the teens? Well, sure. Technically, you're talking $50 would be, not that far-fetched, and it's currently at 139. The issue with MicroStrategy is, where are they going to get their Bitcoin? They may be forced to liquidate to cover their debt obligations. And if that happens, that just further exacerbates the selling, and we could see much more downside movement in MicroStrategy. So yeah, don't be buying MicroStrategy just because you think it's a great company. It is a highly speculative play that, for the most part, in my opinion, it feels like a house of cards just because it lacks transparency. I just don't see where it's going. If we were in a 4-year cycle, we bottom 1st of October. Yeah, right around the beginning of October. So the 4-year cycle, that first year is always 12 or 13 months. Always. Every one of them has been 12 or 13 months. So I just earmarked 12. But remember, I thought it was going to start in November, and here it started in October. The year before, supposed to start in December, started in November. So people are trying to anticipate and get in earlier. So it started off in October. But you guys might remember earlier last year, the comment came up a lot, especially in my crypto program, about when I was thinking of selling. And my comments were that I was going to move my crypto off of my cold storage, move it back to the exchanges, and start selling in September. That was my plan. But I convinced myself that this time was different because of the political administration, because of the regulatory environment, because of President Trump and all his tentacles in crypto. I just felt like this time was going to be different. And so far, it has not been different. So far, it's actually followed exactly what Bitcoin has done historically. So this is not a good sign to start off. Here we are, 3 months after the peak there, and we've been dropping, which means we've got technically 9 months more of sell-off in crypto, which is not good. And Dan says, do you have an expected drop for Solana, a place where you can expect to turn 85, 75? It's a great question. It's hard to calculate those things out because until Bitcoin stops falling, nothing else is going to stop falling. Bitcoin needs to stabilize and start to move back up. Most likely these altcoins like Solana are going to fall more percentage-wise than Bitcoin, which means, and I hate to say it because this is my third largest position, that means Solana could be down around $20 if you look at where it's at. So at this point, I would not be looking to buy crypto, at least not for the next few months. Wait and see what happens. It's funny, how many people told me a silver sell-off wasn't possible because this time is different. The only thing that's different, Steve, is the timing, right? The timing is different. And I'm happy about the way my silver trade turns out. You guys know I was transparent with you. I told you a couple weeks ago, I shorted silver. That one ended up being a loss for me. And I'm going to short it again because at some point this thing's going to come crashing back down. And man, what a wild ride for SLV. This is just absolutely chaotic. It was down almost 4% today. It's down a little bit more in the after-hour session. I figured we'd start triggering more margin calls on this one over the weekend. But right now, it fell a little bit more today. So don't worry about your little extra piece there, Big Eb. Yeah, Dan, I'll tell you, if it got down to, hey, Brian, good to see you on Saturday night. Brian plays in a variety of musical bands. It was so awkward. So I go to this show, And I'm there to see Brian play, and I'm dancing, and I'm just watching the band play. They were actually really good. And all of a sudden, this lady runs right into me, grabs me, and just starts dancing. And I'm like, okay, I'm fine. So she starts dancing, she's getting pretty frisky, very flirtatious. I'm like, wow, I could use this. No. I was like, wow, this is just odd. I didn't make any eye contact. I had no idea where she came from, whatever. And the song ends and she walks away. And this guy comes up to me, he kind of pushes me on the shoulder. He goes, hey, buddy, that was my wife. I'm like, hey, man, I'm just standing here dancing. I did nothing. Oh, anyway, it was good. Good night. It was a fun time. That's true, Big Ab. Yeah, I think she was... This couple, walked over the corner and started arguing, and then all of a sudden she's dancing with my buddy. I'm like, I'm getting off this dance floor before a fight breaks out. I want nothing to do with this. It was bad. Oh, but anyways, fun dancing. So Dan says maybe $25. Look, if Solana got down to 25, I would be a buyer for sure. I would definitely be a buyer of Solana at 25. I don't have the chart up here, but here's Solana. We're currently at 104. Yeah, so if it fell another 75% from here, sure. This is a chain that people are actively using. And the reason I threw 75 is you look at this huge rally that started in 2023. It's down around $20. So I hope it doesn't get there. I know that hope is a foul, vile, disgusting four-letter word that you use in trading, but I'm optimistic that it won't get that low. I don't think we'll see Bitcoin drop 70%. I just don't think it's going to happen. But stranger things have happened, and I'm entitled to be wrong every now and again, but I don't think we're going to drop 70% in Bitcoin. I just don't think it's going to happen. All right, so yeah, that's my current position or current option positions. Here is my current outlier or outright long position, which I've modified because that weird execution I was telling you guys about, which is just such a bizarre execution piece, and it happened. From an earnings front, there was really nothing that's that exciting today, although Disney's on that chart. Let me sort this by market cap. Oh yeah, we had Palantir. We have stocks going opposite directions. For example, Disney was down 7%, they beat earnings. You have Palantir's up 7%, and they beat earnings. And I think somebody in this room was really... oh no, trust me, Jeff. It says Bitcoin has no greater friend than Merlin. There are a lot of people who are way more enthusiastic about Bitcoin. I think Bitcoin is a very interesting concept. I think it's great. I think it's going to help the financial markets. But I am definitely no Michael Saylor. I'm not trying to hoodwink anybody. I'll tell it like it is. So let's look at Palantir. Palantir after hours up 5%. So it's certainly dropped a little bit there. But you're coming to that lower demand zone that we've drawn out here, kind of filling that gap, which is between 143 and 139. I think, Big Ed, you were long. There was somebody else who said they made a big option trade on Palantir. Let's hope it works out for you, right? It's up 5% in the after-hour session. It's this little dashed blue line you see here. Here's your 5-minute time frame of it. You can see the pop. Remember, Tesla did the same thing and ended up down the next day, so be careful on these earnings announcements. Even though it seems rosy, something might get said later on during a press conference, or something comes out overnight, and this thing could come crashing back down. So, again, I'm in that don't look a gift horse in the mouth type of attitude. Jeff says, first time Kathy Wood was ever wrong. She has been wrong quite a bit. Colin Teddards and I did a show, was it 2 years ago? Might have been 3 years ago. You can go look at the archives on the Trader Merlin show. There's a picture of a boat sinking, and it says, is Kathy Wood's ARK fund sinking or something? And it plummeted from that show. It was actually kind of a cool timing when I wanted to kind of revisit it, months down the road, but she's wrong a lot. We're all wrong a lot. You just got to own it. All right, so that was your earnings front. Let me go to your economic calendar. Today was boring from the economic calendar front. As you can see here for the U.S., you just had the ISM manufacturing PMI. And I'm sorry, Dan, I didn't get a chance. I saw your email come through. I didn't get a chance to read all the way through it. This is a very limited. I think it's like 300 participants giving their opinions on what the manufacturing space looks like. Looking at the chart, though, this is actually a pretty good sign, right? You're seeing a jump up. And really, we've had three reports since 2022, late 2022, that have been above zero, which means optimism, which means there's a feeling of optimism in the manufacturing space from those managers. But I'm definitely not hanging my hat on this one. That's a one-time bar worth of data. We'll see what happens next month. But the positive sign for anyone here who's bullish in the markets is we're above zero, right? We're above zero. Because I sold all my Palantir end of year at 190-ish. Oh, there you go. Good. Buy low, sell high. Sell high, buy low. We have a rate announcement coming out here later this evening. It's going to be at 10:30 p.m. tonight. East Coast time, 25 basis point expectation increase. We'll talk about that on tomorrow's show when we look at that one. And then you look over here, and for the U.S., we have some jobs data, but this is kind of the first of it. Remember, we have the big announcement happening on Friday, which is going to be the unemployment rate. Tomorrow, we start things off with the JOLTS job openings. They're expecting to see more job creation. Other pieces for the U.S., you got total vehicle sales, you got tip economic optimism, and then a couple of FOMC members speaking. See if they give any shouts out to their new potential boss here at the Federal Reserve. And that is it from an economic calendar perspective and earnings. Lisa, didn't NXPI? Maybe. I think they did. Yeah, they did. And they're falling pretty bad. So NXPI was up 2% during the day, and now they're down about 5%. I didn't see the numbers here. They're expected to make $3.31. Came out at $3.35. So beat earnings, but no. They got crushed. So some negative comment came out there on NXPI. But yes, they did report earnings today after market hours. And looking at the blue line here, I know it's very hard to see. It's super faint on TradingView. It's right around 220, which is kind of the origin of that big move that started, looks like, the last day of 2025. All right, I'm going to wrap it up. A 52-minute show today. I'm going to end my streak of 1-hour shows. Tomorrow, I'm going to have John Rowland on the program. I don't know which way that show's going to go. Obviously, we'll talk about the wildness of natural gas. I mean, that thing is absolutely imploded. As expected, Big Ed was saying, I'm going to short natural gas, but I know you were kind of joking because it was just too dangerous. Well, now you're in hindsight, you're wishing you did, right? I wish that you were selling that one on natural gas. But, natural gas, silver, these commodity markets, wild because that dollar index to me is about just absolutely wild. So we'll ask John Rowland about natural gas. If there's something that you want me specifically to ask him, email it to me. You can see the name on the screen there, tradermerlin@gmail.com, or put a comment down below any of the YouTube videos, and I will get to those questions on tomorrow's show. So thank you guys so much. Have a fantastic remainder of your day, and I will see you mañana with John Rowland of barchart.com.